I'm joined by Kevin Osborne. He's portfolio manager of the Old Mutual Africa Frontiers Fund. Kevin, thanks for joining us. Obviously a fantastic year, 2012 for African equity markets. Give us a rundown on some of the performance of the stock markets within the continent.
Yeah, so looking at some of the bigger markets, the top performing markets during the year were Egypt and Nigeria, which are two of the big markets. They were both up in excess of 40% in US dollar terms. The other good performance came out of Kenya, which was up around 30%. And the disappointing market for the year was Morocco, which is, again, in the top four by size, and that was down around 15%. The Moroccan performance was sort of driven more by the link between Morocco and the European Union. So overall, our fund delivered in excess of 30% during the year.
So, I mean, that's 30% in US dollar terms. I mean, that's a fantastic investment result. What's your sort of expectations going forward for this year?
Yeah, it's always difficult to sort of put a number on it, but given that you've had such a strong performance during the course of last year, we'd probably expect more moderate returns. There's still good opportunity in the rest of Africa. We're starting to look at some of the more smaller, more peripheral markets where that haven't followed the big markets up, but somewhere in the sort of 10 to 15%. It's interesting to note that we've got off to the races in the rest of Africa markets this year, with Nigeria up around 10% already, Kenya up around 10%, Zimbabwe up I think 9%. So we've had a good start to the year already.
We just heard Peter Brook from Macro Solutions talking about how the South African market re-rated, and it was largely on the back of the price earnings multiple rising. When you look at some of these economies and the stock markets in the likes of Egypt and Morocco, is there solid earnings growth going forward there that you could justify the future rally in those markets, or what's the sort of dynamic in terms of seeing the stock market go higher?
So you've almost got to split it into sort of two regions. So you have the North Africa region with the big markets, as you mentioned, Morocco, Egypt, and then you've got Sub-Sahara. So the story around Sub-Sahara is around growth. So you're looking at economic growth, GDP growth from those regions in around 6-7% from your big markets, particularly Nigeria, Ghana, looking at those sort of growth numbers. So the story in the Sub-Sahara region is around the growth and continued growth for the next couple of years. If you look at the North Africa story, Egypt being the most important market, there it's not about the economic growth, it's more about the recovery post the Arab Spring. So beginning of 2011, you had the big changes that occurred in those regions with President Mubarak being kicked out and a new president coming in, and the markets took a big smack during that period. So a lot of what you're seeing now is the performance out of Egypt is actually more of a recovery rather than about strong economic growth. It's reasonable growth. You're getting similar sort of growth that you'd expect in South Africa, around sort of 2 to 3%, but it's not the 6 or 7 that you're seeing in a number of the sub-Sahara countries.
Okay, so that's obviously that growing economy are contributing to the profits there. Specifically in Egypt, as you say, it's been a recovery. Are they back to sort of the same valuations they were pre the Arab Spring, or have they now actually kicked on? And how do you view the sort of political environment there for business?
So I've actually just spent last week meeting a number of Egyptian companies, and there is still not a great amount of optimism amongst the corporates. There's still a lot of uncertainty. There's an interim president in place. There's continued statements of nationalization and changes to the system in which they operate. So Egypt has a number of subsidies. There's fuel subsidy, there's fuel as well as food subsidies, and the government's talking about changing a lot of that and going into the future. So there's still a lot of uncertainty, and the banks are not talking about additional investment. As far as where Egypt is, it's still well short of its peaks. It's probably 50%. The Egyptian stock market is around 50% of where it peaked in 2008. So we had the financial crisis, and then following up beginning of 2011, you had the whole Arab Spring crisis. So it's still well below where it started before both those events. but you did see a strong rally in the second half of the year as people expected a greater stability to come through into the country.
So that uncertainty that seems to be lingering there, it sounds like it's holding back investment by companies in that market.
Yeah, that's right. So as I was saying, chatting to the banks, what you're seeing is the limited lending that they're doing at the moment is into working capital rather than into investing in expansion. So, and the working capital has been increasing in Egypt for a number of reasons. The one is there's been fear of a currency depreciation, which we've started to see in the last month or two. Up until that point, the country had been defending its currency and trying to hold it at a sort of peg it against the dollar, but we've seen a depreciation there. So companies were importing ahead of, or stocking up ahead of that currency depreciation. And then given the uncertainty around a number of the, as I say, subsidies, export tariffs, import tariffs, the companies have had a stock up and uncertainty, and with the violence and you've seen companies actually wanting to hold stock because of potential delays that you're going to have at the ports and moving goods around the country.
So the situation a bit cautious at this point. Perhaps we can turn our attention to further below or further down the continent. Kenya's got a presidential election that's coming up. There were problems there the last time. What's the sentiment around the elections? Is it expected to be largely peaceful this time, or is there also that sort of restraint that big business is holding back and waiting and seeing?
I think there's a far more positive attitude in Kenya, and there's almost the sense I got when I was last spent time in Kenya was there was almost the citizens of Kenya were a little bit embarrassed about what happened last time. So 4 years ago, you had an enormous amount of violence post the election. They introduced both a president in order to sort of, the peaceful solution was that between the two sort of candidates that were worried about what was happening, were trying to get into power, and the election was a sort of 50-50 election. The solution was that they introduced a prime minister as well as a president.
Right.
The expectation this time round is that there's not going to be an outright winner in the first round. Kenya is very tribal, so each tribe is obviously going to vote for their own representatives, and then it's going to come down to what they're referring to in the local market as the kingpins. So you've got your one or two main tribes and their representatives and who they align themselves with. But the expectation amongst the Kenyans is that this time around there's not going to be violence, and there have been some changes to the constitution to try and ensure that you have a fairer election this time around.
Okay. Well, let's hope that it is so. I mean, it's a fantastic country, but let's have a look at some of the themes within the portfolio now that you invest alongside. A lot's been made, obviously, of the emerging markets consumer. To what degree is that a theme in the portfolio? And then what are some of the other themes that you have that you currently look at in terms of Africa specifically?
Okay, generally the way I run my fund is more a valuation driven rather than a theme driven. So typically I look for companies that are offering reasonable value, and a lot of the calculation of that value brings into play the number of the themes that you're talking about. So if Africa is about the demographics. So the big story for the African continent is about population growth as well as having a very young population. So Africa's population is expected to exceed that of China within the next 15 or so years, and within the next 20 years it's expected to exceed that of India. And the story about Africa is exposure to this consumer. Parallel to that is obviously the exposure to what's happening on the mining side, which generally is what is going to lead to the kickstarting of economic growth within the country. But then you want to be exposed to the consumer. And we're exposed quite heavily to the consumer, both through more traditional consumer goods, so for instance, exposure to beer or cell phones or food. But on top of that, you've got banking. And in many of these countries, banking penetration is exceptionally low. So an example of that is Egypt, where for instance, you've got around 80 million people, but only 8 million people with 8 million bank accounts, And if you think that most people who do have bank accounts are generally going to have 2 or 3 bank accounts,
Right.
the number of people with actual bank accounts is very low. So the government, even the government, which is around 30% of employment, pay their employees in cash. So the opportunity is to get people into the banking system is enormous in a country. I mean, I was using Egypt as an example, but you've got similar penetration levels of banking in places like Nigeria or Kenya, as we mentioned. Cell phones quite widely penetrated into these markets. So, for instance, Nigeria is around 70% penetration levels. So that's obviously SIM cards divided by population. So that's reasonably developed, the mobile telco industry.
Right.
But banking has still got a long way to go. In the case of beer, you've got opportunity there because obviously most African people enjoy beer, but around only 10 or 20% of it is what we would call formal beer, made by the big companies that we're familiar with, the SAB Millers, Heineken, Guinness. But the opportunity for the beer companies, for instance, is to really sort of increase its share of that informal segment where people are making their own beer.